Governance frameworks often accommodate clean failures, failures that arise from business experiments. However, disregard of established rules, ethics, or governance practices is fundamentally inexcusable. It's very important not to glorify poor governance standards under the guise of entrepreneurship. Let's try and understand what failing clean really means.
Whether it's large listed enterprises or even startups, as they're growing, it's important to fail. I mean, while you fail, learn quickly, be agile, but governance shouldn't be compromised because you're growing at a very fast pace, right? And I'd like to call it like a clean fail, right? Is the failure attributed to specific business experiments which were kosher, or is it due to these kind of ugly ducklings, right? You have fraud or bad governance practices. So maybe just as in sort of a way to conclude what we are sitting here today and discussing, how do you look at building governance as a strategic tool?
I don't think one should worry about fraud. I mean, I think it's a risk of doing business. You're doing business with people. Sometimes customers will defraud you. If your return rate is very high, and you've still delivered products. Like in e-commerce, like Piyush is saying, once you start analyzing data, you'll see pockets of customers where their return rate is very high, or they have high rebates, high discounts. So fraud could happen, anywhere. So I don't think you can run a business thinking, oh, I mean, what do? I don't want to ever commit fraud. That's utopian. That's not going to happen. Fraud is bound to happen, whether it is from your customers, your vendors, your employees. And as you grow bigger and you become a favorite of everyone, there is also greed, and also sometimes even competitors, like Sharda was saying, will try and, scuttle your growth and try and induce someone inside or outside to generate kickbacks, try and see how fraud proof is your company. So I don't think you can run your startup thinking, I want to avoid fraud. But I think you should run your startup thinking, I'm building a sustainable business. I believe in the idea. I want to create a business where, it exists 5 years, 10 years, 15 years, for the longer duration. It isn't 1 year. I mean, you want to exit, fine. You don't want to run it for 5 years. That's your chance, your choice. You have the right to make that decision. You want to sell it to another company, but at least your idea or your business survives even if you are not there at the company. What is worst is, if the business is a good business, but that business is completely lost its mojo because of all these governance issues, like related parties, non-payment of PF, favoritism with vendors, kickbacks. I mean, those are messy stuff. You can't unwind them. And today, the regulations are so strict, in terms of the insolvency and bankruptcy code, that even a small creditor, who's owed, 100, 200 rupees, an operational creditor, can file a insolvency petition if his bill has not been paid for 30, 60 days. And MSMEs, micro and small and medium enterprises, have tremendous support from the government. So, and you cannot default on payments to MSMEs. You have to provide for interest, and, so you don't want to fail for the wrong reasons. You fail for the right reason, because your idea was way ahead of the market, for example, or you did not, your customers did not accept your product, or your pricing was incorrect. Maybe you built a Mercedes when the market only wanted a Maruti. Those are those are actually not failures or fraud. Those are just entrepreneurial, lessons. And it's only a stepping stone to success. I mean, that's all I would say. And then let Manoj and Sharda and Piyush chime in.
Yeah, I mean, for me, closing statement would be, don't play the losing game. Because all of us have been saying, stay put, stay rooted. And if I think you are all got into it's like a 5-day match, not a 2020 that we are playing here. All types of non-existent shots are played in 2020, whereas in a 5-day cricket match, you generally see the copybook style of, and you actually, that's where the real class of a person is known rather than what you see in a 2020. So basically, what I wanted to communicate here is that governance is a vast subject, and expecting a startup to go the way a listed company is doing its governance or invest in compliance, maybe it's a tall ask. So, as an auditor, I would only expect that certain basic level of control should be there. There should be regulatory mechanisms to be respected. Uh, there should be periodic review by the board, operational management to understand where company is heading. And if there are any reasons where they want to interact with an auditor, don't wait for the auditor to come at the year end. I keep telling my clients, even the matured ones, even the startups and the matured ones, that keep the auditor in loop when a special transaction is happening within the company. There could be certain non-compliances that you are already doing after 31st March. If you come and tell me that this has happened and now correct it, help me correct it, it may be very late in the day. And I have never shied away from giving even a disclaimer in my client's report. And a disclaimer, continuous disclaimer, after a couple of three disclaimers, generally we walk out, because if the client is not interested in continuing and doing it in the right way, is what the way you look at it. And remember one thing, in Companies Act and under various guidance, and including with NFRA also looming over all our heads, moving a disclaimed report to a clean audit report is a big challenge for an auditor and for the organization. So, like they said, fail clean. I don't think we will ever say that the company has to be qualified because you failed in the test that you're conducting or the trials that you're conducting on your product. But if you did it something wrong, I'm sure having a good auditor, he's not going to shy away from reporting it and bringing it to wherever MCA or wherever the filing happens. So spending a little bit on good governance is always good for the organization for the long run.
I'll keep it very short. I think my concluding remarks are twofold. One is obviously the culture. The culture has to be set and followed both by the founders and the senior management, right? And we cannot emphasize it time and again. And that kind of leads the way, intent and all of that. So when you build a company, build it right and build it with the right intent. I'm sure you'll fail, but if you see the definition of fraud also, it's intent to cheat others. I'm sure you'll not make payments if you fail, but the intent should not be to dupe people, right? That's what people are looking for. And if you fail right, you have the right channels like bankruptcy and whatever, right? You can also go and clean those channels. So that's one. The second thing for me is from an internal control perspective, like if I'm talking to the CFOs and legal counsels and investors, I suggest that irrespective of the size of the company, internal audit is very, very crucial. I think Manoj said it, so I didn't want to repeat myself. And also internal audit has become such a clinical exercise. People just do it for the sake of it, give it to the stat auditor and be done with it. I've seen so many CFOs not even want to open the report. So for example, like when I do it, I have the HR, I send it to the HR head, ask for replies, not only for that exercise, you fix it, you move forward, try and understand it, really helps. Rashmi, I'll give you a very small example. I used to work in a hospital and there was a fridge, apparently a refrigerator. Then we are storing injections. There has to be a temperature control that needs to be visible according to the pharmacy laws, apparently. I didn't know it as a CFO, and I mean, honest. I don't think, like Vidya was saying, some of them are chartered accountants, we're not supposed to be experts in all fields, right? So this was a huge eye opener, and you won't believe 1 month later, 2 months later, in some other organization, somebody lost an eye because that drug wasn't administered properly, and that drug got banned from India. So now you understand what is the importance of this temperature and so on and so forth. So, you never know what kind of implications, regulatory impact, authorities coming behind you. As such, you have enough tax regulators and authorities coming behind you, even if you do the right things. I mean, how much more trouble do you want to subject yourself to? I don't know.
Yeah.
But where I'm coming from is take these things very seriously. There is some amount of spends that you do for right cost. You don't have to invest in SAP and Oracle. Go very, basic, try and understand your processes, understand laws and stick to it. That as simple as.
Piyush, your
Yes,
quick
so
word of wisdom.
yes, so enhancing governance is the opportunity of finance to increase the value of the organization. So let's do it. We just have 7 more minutes, so we can take questions.
Yes, I think over to you, Himanshi. If there are any questions, do you want to pose them?
Hi everyone. First of all, thank you so much to the panel and Rashmi. The insights were very valuable, from understanding how regulatory scrutiny works to actually understanding how to unearth a fraud, manage stakeholders, and the concept of good failure. I think we surely got many useful inputs to incorporate in our corporate governance processes. Before our session, we had aggregated certain questions that some of our participants had. These were some key themes and questions that they had prior to the session, which we'd like to maybe get some quick inputs on. The first one is, how do you integrate fraud prevention tools into existing business systems? If you could get some insights on what are the best ways to do it, what are the kind of means that a company can potentially, and the resources of a company can potentially use to integrate fraud prevention tools in their businesses.
Yeah, maybe any specific tools that you have insights into.
I mean, more than tools, let me tell you, now the statutory auditors are expected to look at fraud. So there is a fraud checklist that we are supposed to run through, and because it has become mandatory in our CARO and audit reporting, so it's a kind of tool, because if you have a good audit firm, please ask them if they can share the checklist with you. You can prepare yourself so that you yourself, it's like a controlled self-assessment, I would say, by which you yourself can assess yourself and say where you stand on it. And so that when the statutory auditor comes in, you are in a better position to explain the situation. I mean, though it's not a tool in terms of a AI tool or a technology tool, but this is something which will be, and I feel we are trying to share it with our clients so that it will be helpful for them to understand what exactly are we going to look at.
Yeah, the basics have to be covered first, Manoj, to your point, right? Then one can think of these fancy tools.
Yeah,
Great.
and I think, see, the other thing, Rashmi, is what's interesting is that there are so many startups now who are coming in the fraud prevention space, fraud and data analytics. There are, just like there are technocrats who are inventing products on e-commerce or edtech, fintech, there's so many new products. And many of these are open source, and many also want to test on their own, so you can reach out within your own community. You can integrate some of these tools on the prevention side very easily. I mean, unlike earlier times, when Manoj and I started in the business, 20th century, where it was all pen and paper, and SAP implementation was a big business, imagine, for so many companies. Today, you have lots of tools which are no code, low code, I mean, whatever terminology, and very economical on any sphere, whether it's HR, employee referrals, employee management, even measuring, satisfaction, customer surveys, vendor payments, cash flow monitoring. Lots of tools which companies can use. It's a matter of how you build it and how you include it. And any internal auditor will be able to, suggest tools which the company itself can use, and they all come with some really fancy dashboards, very impressive tools.
Great. Anything else, Himanshi, you have that you want to address, or any other questions?
This covers it, Rashmi. Thank you.
That was it. Okay, great. Well, I think Saradha, Vidya, Manoj, Piyush, thank you very much. At least for the first time, I'm going away with a discussion saying there are ways and means to actually very responsibly and objectively deal with frauds, prevent frauds, and sort of build the right mechanisms across board through the right culture. So I think I hope everyone else enjoyed the session, and thank you so much for all these valuable insights. And What we are going to do is at the end of today or maybe tomorrow, we'll just circulate some materials on all the conversations we've had with the participants, so they have a little takeaway with them. But thank you once again. It was a wonderful discussion.
Thank you. Thank you, Rashmi, for giving us this opportunity.
Thanks everyone. Thanks for your time.